Hello everyone, good afternoon from Riga. So today we're about to talk. Uh, hello. I don't know if just a second. I need to see here. Yeah, okay, it's working. The YouTube code is working because I was trying to see if the YouTube code is working. Good afternoon, everybody. This is Wisdom or Wizzy, Dukas Copy Analytical Team or Analytic Team or Research Team, depending on whichever angle you're looking at it. And we are about to talk the use of CCI Oscillator or indicators. As you guys know, those people that has been following me on this webinar for the past few months, I've been talking mostly, or I've been having webinar mostly on indicators. And the reason why I'm doing webinar on basic use of indicators, because we in the research analytic team, we usually use the indicators ourselves. You can see it on your screen right now. We use the indicators ourselves. Okay, thank you. I believe that is Nicole. So thank you, Nicole. So we usually use these indicators ourselves. That is the reason why my colleague Anastasia, she usually write the articles and I present it. And I'm not a fan of using a lot of indicators. You guys already know about that. I do my technical analysis very basic. When you go back to the basic, you are more successful than packing your chart with all indicators you have there in the forex or the commodity market. That being said, you can easily use what you are comfortable with. Some people, some traders, some investors, they use the MACD in combination of the stochastics to see the view of the market, to differentiate what they want to do, if it is to buy or to sell the stock or currencies. They use the MACD indicators, they use the RSI, they use the stochastic ADX. So it depends. For me, what I usually use, it is the moving average, mostly the two moving average. I will say three. I use the 50 period simple moving average, the 200 period simple moving average, and the 21 period exponential moving average. Those are the 3 period moving average which most time you will see on my chart when I'm doing my technical analysis, in combination of what? The channel, because I want to know the trend. So I trade with trend. And then when I'm trading with trend, I need to look at the price action to see what we have there at that particular time, how the price is testing a resistance or a support level. So that is what I use myself. That does not mean that I don't know the other indicators out there. If you check our previous video, you'll see that I've already talked about the other indicators. You can go to our YouTube webinar page and you'll see it. Or better still, if you just want to read the documents or the articles, you can simply go to the research team. You see a lot of them there, and you see article, you click on it, and I'll be talking about these indicators since November. So it's going to 4 months right now. I've talked about the Fibonacci, MACD, the RSI, the stochastics, the alligators, the SAOS. Already discussed it. You will see it on the webinar YouTube video. You can if you want to find it, you can just put it, the use of alligators indicators, the use of stochastic oscillators to develop trading strategy. You will be able to find it, the webinar there. So talked about this last week. We talked about this Litecoin US dollar. So that was an instrument which we added to our trading platform. So I talked about this. So today we're talking about the use of the CCI Oscillator indicator to develop your trading strategy. It is very simple. If you are the person that knows how to use RSI, relative strength index, the MACD indicators, some other oscillators, then it's kind of very easy for you to be able to use this CCI. And what is CCI? This CCI is called the Commodity Channel Index. Don't get fooled about commodity that is only stock or crude oil or something like that. You can only use these oscillators to develop trading strategy. No, you can use it whichever market you want. You can use it on the Bitcoin market, you can use it in the forex market, so that currency market, you can use it in the stock market. So you can use it generally in all market, this commodity channel index. And why do you care about using this CCI to develop your trading strategy? It's very easy. The CCI shows you the trend. It determines a new trend. That is what CCI usually determines. It shows you the strength in the market. Also, it shows you when the price is in the overbought zone and in the overbought zone and the oversold zone. It shows you those zones too. It's almost the same thing with the MACD and RSI. But this commodity channel index determine a new trend in the market. As you can see there on the screen right now, as well to recognize extreme condition. Why this extreme condition you can see there? It is because the commodity channel index, which show you sometimes, or not sometimes, most times, when the stock which you are looking at or the currency pair which you are looking at, it is in extreme position, like when it's showing like the price is extremely high, more than the average price in the market, like whoa, this price is just skyrocketing. The commodity channel index will indicate that this is unusual. The price already passed the average prices during some given period of time. That is the reason why you can see also recognize the extreme condition. And this commodity channel index, who created this index or who founded it is Donald Lambert. Lambert founded this index, and as I said before, he created this index to know what's it called, the new trend in the market, and to see if the price already surpassed the average price during a given period. If the price is extremely high or is extremely low, in order for you to see any potential reversal. I will call it a potential reversal because in the stock market, in the currency markets, the chart does not just go north or go south. It bounces. So up swings, I would say it's swing, up and down we go. So this commodity channel index shows you potential reversal and gives you the idea of how to enter or how to exit the market as well. It's just the same with the MACD, the same way with the relative strength index. So Donald Lambert, the creator of this index, recommend to use the average price over 12 period. The customized period or time frame which the founder of this indicators recommend is kind of the 20 period moving average. 20 periods. That is what he recommended. I kind of, if you use the 20 period, it looks smooth. I'll come about this CCI and explain you the numbers in a short while. So use it's kind of very smooth. So Donald Lambert recommend the 20 period moving average, but in Dukascopy platform, I think the default is 14. If you are using Dukascopy and the platform to do your analysis, the default is 14. Yeah, the default is 14. You can change it whichever way you want, so it depends, but we have the default 14. But Donald Lambert said that we need to use 20, so I'll put 20 there. So the numbers, here we go with the numbers. When you talk about the numbers, this commodity channel index, you can easily say that we have from the zero line. From the zero line, we show you the current price. We have the extreme number, and we have the extreme numbers. So I will show you in. Let me take this pencil. So take this pencil. So we have the 100. This is 100 and 200. Then there's this line. Then we have the negative 100 and the negative 200. So if I will put it like this, if I will put this stuff, if I put it like this, you can see the 100, the 200 up we go, and the same, the negative numbers below. As you can see right now on the chart which I'm showing you, when the price is towards the 100, when the price is towards the 100 or the 200, that is the plus, not negative, you already see that the price is extremely high in the market. That is in the over, the price is located where? The price is located in the over bought zone. There's going to be a potential reversal downward. The same when the price is below, you know that there's going to be a potential reversal, and when it's deep 100, you know that the price will like make a reversal, maybe short pullback or long pullback. And when it dip more further to 200, negative 200, you know that maybe this trend might be long. That is the potential reversal. Maybe it might be long or so. So that is the reason why we have that the negative numbers. That's why we have negative numbers there. So what else do I have to say? This is what I just explained for you. When the CCI value shift from negative or near zero to positive indicate that a bullish trend could emerge. That is what I was telling you. And when the indicator decreased from positive to negatives or zero, suggests that the bearish trend could appear. So shows you a potential reversal from that line which I draw up or downward. Then you are looking at a potential reversal. And I would advise for new guys that will be listening to this video in the future, you don't just use one indicators to predict the market. I just said it earlier on before when this webinar just started. I will still repeat it. You need to use different, not only one, at least 3 or 4 indicators to what's it called, predict the market. And finally, despite the wide use of these CCI oscillators might not always be accurate, as the market condition may always line up with the mathematical background. This is not only for this commodity channel index. I will say it applies to all other indicators, be it MACD, RXI, stochastics, whatever. It's not always 100% accurate when you use indicators. That is the reason why even when you already see that the number is negative or near zero to possibly indicate the bullish trend could emerge, you need to look on the candlestick. If you are using this Japanese candlestick still, you need to see before you enter the market, you already see a potential bullish reversal candle or bearish reversal candle before you take a position. That is going to be a topic for other candlestick formations, or the Japanese candlestick, the bullish candlestick, this one, the different name for all the candles which you're seeing on your screen right now. That will be topic for other day. So for the indicators, it's not always accurate. You need to use some other some other indicators, or if you are the person that use price action, you need to use price action to measure to still applies to your technical analysis. And finally, this CCI indicator, the commodity channel indicators, can be used in different time frame. You can use it on the 5 minutes time frame, the 15 minutes time frame, the 30 minutes, the 1 hour, the 4 hours, and so on and so forth. You can use it. So with that, I will say this comes to the end of this webinar, because you can see no other question there. I think we already have another indicators which I will be which I will be talking about. That will be next week. That will be next week, I guess. Yeah, that's going to be the use of our oscillator to develop trading strategy. So it's like we're most always talking about this oscillator. So that will be the next topic. So guys, thank you very much for your attention. For those guys that was listening, and for those guys that will be watching this video in the future, thank you, and don't forget to give us a subscribe to this channel in order for you to get an exclusive video. Not only me, I'm just giving you what's it called the use of technical indicators. We have some other experts that teach you from A to Z about the forex market, EGFS passion. We have iHouse, we have Dog that is specializing on the stock market. We have a lot. So you can just feel free to subscribe on this channel to support us while we are growing in terms of this YouTube channel. We are growing this YouTube channel. We have some other one, but we just migrated to this 1 year ago or so. Or click on the notification button. When we upload the video, you'll be able to receive it and watch it in a timely manner. So till next week, good luck, and I will say good luck with your trade, and see you soon.